Yeah, I'll record it to this computer. I don't know what Dean does on his newbies. I haven't done newbies in a long time. So what I normally do on newbies is kind of obviously go through any questions you've got. Hopefully you guys have started on the education. So it's just a case of really any questions you guys have got. We can go over some basic bits, and if you want to go more in depth with stuff, we can do that as well. So if you don't want to talk, so you can obviously unmute yourselves and you can talk at any point. I fucking waffle a lot. So if you've got a question and I'm just chatting shit, just butt in. It's all good. Either that, or you can just go down to the chat option at the bottom, and I'll keep an eye on that, and then you can just put a question in there, and then obviously I'll answer that as well. So that's not a problem. Ideally, with these live sessions, we kind of the reason we've done the newbies obviously is a lot of you guys will feel that you can't ask questions in the main group, or you haven't got the confidence to, because they sound like stupid questions. And I promise you guys, there isn't a stupid question, because pretty much anything you're thinking of now, I'm pretty confident I've already thought about it and asked a question about it, because we've all got to start somewhere. So before we start, is there any questions? Wait, sorry, 2 seconds. Okay, turn it off and then head to bed. Right, 5 more and then bed. Sorry, dealing with the eldest one. She's going to bed. So yeah, so what I'll do is I'll kind of screen share with you guys, and we'll go over the charts. I don't really know how in depth I'll go, but maybe we could talk about market structure. I know some of, well, most people, they struggle a little bit of understanding that, and then we can talk about maybe more of the banker stuff, why price moves to like certain areas, and kind of how it reacts in certain places, and stuff like that. If it all goes over your head, or if it's too much, then just say, and I'll kind of dumb it down is probably a wrong word, but I'll kind of make it a bit easier for you to understand. But I've just got to bear in mind, most of you that are on here haven't been in long, so it is daunting, and it will take a little while, but give it a few weeks and you'll kind of get into it. Before I do start, have you got any questions? It's very dead quiet. No, everyone's good. Okay, cool. Okay, if you've got questions, ask in the chat or button. Right, what I'll do is I'll share screens and we'll go on to trading view. Cool. So you guys now should be able to see my trading view. I'm just going to get the chat box open so I can see it if you do want to ask questions. Okie doke. Right. So what I'll do is, these are loads of lines from when other people have been using my trading view. So look, see if I can get rid of some. Remove. So what I'll tell you is kind of what I'll do, because it's not massively covered in the inside, because we've kind of taken it away because people had learned it, because it's pretty easy to learn. And then what they've done is they've just kind of cracked on with other bits. But what I'm going to do is I'm going to start you guys on something called quarter theory. Okay, so hopefully you guys through the education side have learned what pips are. So pips are these numbers on the side here. The very end number is known as a pipette. So there's 10 pipettes to 1 pip. So as you can see here, between each one of these, you're looking at 50 pips. So you've got 60, 65, 70, 75. So the way that quarter theory works and the way that banks move price is nothing's kind of random. Everything is moved to certain areas on purpose. And the kind of the best way for me to explain this with quarter theory is, if I was going to go and meet a mate for a beer, I would say, let's go meet for a beer at 9 o'clock or 9:15 or 8 o'clock or 8:30. But it would never be 1957 or 1423. It's kind of their whole numbers, right? And as you see here, and this indicator is available for you guys, this will show you how much the banks respect like key levels. So I'll go to what only scripts might be in there. There we go. So it is the TCQ, I believe. So I'll add this on, and this will show you guys what I mean. Sorry guys, computer's really slow. Need to delete all this midget porn. Right, there we go. Right, let's try this again. Should load in a second and you'll be able to see it. I must have loads of stuff on my computer because it's really, really slow at the moment. Cool. Okay, let's do that again. Invite only. And when you guys, just to make you aware, when you do apply for the indicators, this is where they'll be. So if you need to look and you like, oh, I can't find an indicator, I've done the form, you'll have an invite only scripts that comes up in your indicator section and it'll be in there. So there we go. Right, so this here is the quarter theory levels. So the way quarter theory works on the larger scale is pretty much quarter theory works over like 1,000 pips, and then within those 1,000 pips, every 250 pips, you've got like major quarter levels. What I've done is I've made that smaller because I don't personally, for me, I don't want to trade like 250 pip levels because it's just massive. I'll be in them for days. It's kind of very emotional, and it's kind of, yeah, I don't enjoy it. I kind of like to be in and out of trades as quick as possible. So the way I've had this made is it's kind of on a smaller scale but still the same principles. So the red line is your whole number. So if I go on to the 15-minute, oh fuck's sake, sorry, 2 seconds, there we go. So as you can see here, I'll do, so yeah, so you see the red line is 400, then we've got 500, then the 600 there. So there, so between these levels, and you can get the measurer here, and you can see from there to there we've got 100 pips, right? So the red ones are 100, the blue one is the 50 to kind of indicate the middle, and then the green one, this bottom green one, is the 25 level, and then the top green one is 75. And then what happens is price moves up between these key levels, and I use this when I trade to kind of get in and out of trade. So if I'm looking for a particular entry and it's on a quarter theory level, to me, and when I say quarter theory level, I either mean the whole number, the 25 level, the 50 level, or the 75 level, then to me, that's a good entry point. And then what I look for, and like you can, if I go on to like the 4 hour, so each one of these candles is 4 hour, and we get kind of like larger picture, you can actually see here how much it's respecting these levels and works between them. So you can kind of look at different things like supply and demand, for instance. So you've got this kind of area here, price has broken down, it's created equal lows, it's come up to this kind of area here, and then we've had the nice drop off. So what I do is 4 hours way too big for me to trade off. I like to look at the 4 hour just simply for where price is going, but I wouldn't trade off the 4 hour. Generally, I'm trading off the 1 minute for supply and demand and bankers, and I'll cover that a little bit today. But what I want to kind of show you is whenever you get an uptrend or a downtrend, you're always going to get candles that kind of they're like known as order blocks. So there'll be candles that like kind of go the other way. And what I'll do is I'll show you an example here. So you can see on this quarter theory level here, we've got this order block here, this one here. So what price has done is it's come up and it's come down to this quarter theory level. It's kind of tested it twice. So what banks do, and you can, it's a perfect example here to be fair. This is how they catch people out. So if I was looking to get into this trade, sorry, give me 2 secs. I was looking to get into this trade here. So say for instance, I got in here, I'll change the color of that so you guys can see. And this is where a lot of people get caught out with stuff. Sorry, there we go. So that's my entry there. I would generally put my stop loss just under the quarter theory level, just because the quarter theory to me acts as like a brick wall. So if price isn't strong enough, price is going to rebound off of that quarter theory level, and then it's going to reverse. If it's strong, it's just going to go straight through it. It's just one of those things. But generally, when price, there's like 2 or 3 confirmations that you can use with quarter theory for reversals, and kind of you can use like the banker's strategy and also supply and demand to kind of work out good entries for getting in, also using quarter theory. But this scenario here, say I got in here, it started heading up this way. Some people, what they'll do is as it's going up, they'll move their stop loss, which was down here, into profit, just to cover their trade. And as you can see, it's come back on itself, and it would have taken you out. So you wouldn't have made anything. You would have just covered pretty much your entry. But the thing is also, if you leave it too tight, and you've got to be aware of spread when you guys are trading. Spread mainly on most currency pairs is around 1 pip. On different pairs, it can be a little bit more. And at 10 o'clock at night, it goes mental, because that's when you've got the changeover. So it can go, I've seen spread go like 30, 50 pips. So you've got to be really careful not to trade around 10 o'clock at night. So if you're in a trade at like 9:30, 9:45, start looking to come out the trade, unless it's really far away from your entry. So say, for instance, you're in profit, I don't know, 30 pips, 40 pips. Then what you could do is just stay in the trade, but just watch it for the hour, or take partials, maybe take half your profit out off the table, just so it's okay. But generally, don't trade around 10 o'clock, just because it's not good practice. What the banks do is they kind of, you can see here has been a reaction up here. We've come down, and as you can see, price is nipped out this point here, only by maybe a couple of pips. Do you see here how it's nipped through and then it's gone? So you'll find this all the time in Forex. What will happen is it will react off of a key level, and then the banks will kind of, they'll see loads of buy orders and sell orders, because what happens is the banks don't have this. The banks have like a grid of all of these different pip levels, and then they'll have a number next to them with how many orders are on that level. So on this level here, for instance, say there's, I don't know, say there's 200,000 trades that are waiting here to go live. You might have 2,000 trades at this level, but you might only have maybe 50,000 trades here. And what banks do is they'll see where most of the liquidity is, where most of the people are. And then what they'll do is they'll kind of work their way up. They'll come down, they'll nip all of these orders out on purpose, just by a couple of pips. And what they do is they work together. The banks will work together, put money into the market, and then they manipulate it. It's really bad. And then what they'll do is they'll take you out, and then that's when they go on their move. So this is why it's really important to kind of give your stop loss some space, just to kind of be safe. So generally what I do if I'm looking at trades is I'll kind of, previous price movement will always give you an idea of what's going to happen for future price movement. And what I kind of mean by that is, if we still might be all right on the 15. So if I put this right here on the tip of that, and then we look back, we can kind of see this area here. So for me, in that area, I can see I've got this candle here that to me could have been tapped into. It looks like it's come down, taken this order block here. So this area here, sorry guys, I'm getting a bit of a cold, so I might cough a few times. But you've got this area here, right? And that's known as an order block. That's known as a banker's candle. So a banker's candle is like a last up candle before a down move, or the last down candle before an up move. And as you can see here, on the up, but it's gone down and then it's carried on up. So that's known, it's either known as an order block. Some people call it an order block. Some people call it a banker's candle. It's the same thing, it's just different wording. But what you'll find is there's reactions off of these all the time, especially if you can find them on quarter theory levels. So that's where that nipped out to. So what you can see here is price nipped out this banker's candle, or this order block, not by a lot, only by like 3 pips, if that. Yeah, 3.5 pips, not a lot. And then we've had that reversal. So when you're looking to take trades and you're looking to where to put your stop loss, always be wary of where price has been before, when you're setting it up. So for instance, I was in EU the other day. Let's have a look if I can find it. Okay, so EU on the, it was right before it had the, it might be back here. One sec. I'm gonna take this off because for some reason it slows down when, and then I'll put it back on to show you guys. I might actually have to fully take it off. Is there any questions? Oh yeah, right. Sorry, we've got questions here. Sorry guys, totally missed these. 2 secs. I'll go over these questions and then the mouse got a mind of its own. Where are you? There we go. Okay. Hi mate, are you looking at what went wrong trade lost on EG today, trying to supply and demand and SMC? What to do? Can't talk right now. I'm at work. Yeah, we can have a look at it. Definitely. Sunday night spread is ridiculous. Yeah, it is. Yeah, yeah, yeah. You don't want to be taking trades really at Sunday night. When the market's open, it's just it's mental. The best thing to do. Some people don't even trade Mondays and Fridays. They'll only trade Tuesday, Wednesday, Thursday. But this is kind of like what we're teaching you guys. Like if you can make 1 or 2% on each one of those days, and you've made like 4 to 6% in 3 days, and you've got 100k account, that's like 4 grand that you guys have done in like 3 days. Like people work a whole month to make that. So when you go to the funded route and you kind of go for these larger accounts, you don't need a lot to kind of really get your kind of money and time back. So okay, right, so let's have a look at trade. What day was it? It was, I think it was, yeah, it looks like it's thingy. It was a massive drop. Let's go on to the larger time frames because I was looking at it on the 1 minute. So that's the 1 hour. I think it might have been here. Yeah, I think it was here. Oh, come on. 5 o'clock in the morning on Thursday. No, it wasn't it. Where was it? Let me just check. Yeah, okay, yeah, it was the 30th. So, yeah, we've gone past it. It's the 30th here. Yeah, there it is. Fucker. Okay, yeah, so it's here. So if I'm just going to put a line here just so I can find it on the smaller time frames. And 30th. First. Oh, fucking hell. This is, yeah, don't worry. Sorry, guys. 30th. I'm fucking all over the place. 4th. Right. There we go. 18th, 22nd, 28th. There we go. Yeah, my bad. Oh my God, this computer. Right, here we go. 30th. Here it was. Yeah, here. Okay, yeah, it was here. This is where I got in. Cool. Okay, so what I done, and this is what I'll kind of show you my thought process when I'm taking trades. So I'm just reading the trading. I was watching the one being then one pipped. Yeah, so this is it here, right? So right, here we go. So this is the 1 minute. This is what I trade. So each one of these candles is 1 minute. And what I was looking at is, so what happens with these, right, is these bankers candles, they're kind of knocked into, and when price goes up and takes these out, that means that they're kind of money's been collected on them. They're kind of, after that, they're not used. If you think of like a sniper taking out like kind of the enemy, technically when the banks pull up into these, they've kind of just killed the enemy, so it's done, so they can move on. So what you'll find is they'll kind of pull up into these areas, then you'll get a reaction. And as you can see here, it happens all the time. So you see this little order block here on the 1 minute, move that down there, boom, straight into it. Do you see? And then you get that big pull off. So even on this scenario here, and this is kind of what I look at. So if this was your entry here, if I click on that, so that's your entry there. You have it down generally a little bit because you've got to account for spread to get you, both parts of the spread have got to get you in the trade. So even, and once again, if I turn on, yeah, so this is kind of in between the quarters. So this is 86 and 90, but you've only got a 4 pip stop loss on this, right? So I would have made that a little bit wider just to once again count for spread. So when I was saying about looking at previous price movement to kind of then confirm how big your stop loss is, this is like a perfect example. You can see the wick here. So my thought process with stuff like this is you see kind of equal highs and equal lows all the time. So to me, there's a high point there. So I would think maybe price would kind of go up to this height, then get the reversal, because then it kind of covers it. So what I would have done is I would have my stop loss there to cover this area here, but then we've had the drop there. So when we look at that for like a trade setup, you've got this here, so that's your stop loss, and then you've got this coming down here to that. So in that trade, that's nearly 5%, so 4.95%. Obviously, you're not going to know when it reacts, but to me, what I would be looking for in this kind of scenario is it taking liquidity, which it has done here. So what I mean by taking liquidity is underneath here, you've got like buy orders. So underneath this section here, you've got shitloads of trades. There's loads and loads of money sitting under there. There's loads and loads of money sitting up above here. And then obviously on the higher time frames, it's just bigger and bigger, right? So what the banks do is they'll take liquidity as they go along. So in this scenario here, you can see it. If I remove this now, you can see how prices come down. So it's nipped into this order block here really nicely, very minimal drawdown. Then we've had that movement down and it's taken liquidity here. So as you can see, that's the lowest point there. And as you can see, it's gone through like a, what is that? Yeah, like 2 pips, if that, a pip and a half. Taken liquidity, thank you very much. And then we've had that reversal up, taken liquidity here, but then it's gone deeper into this candle. And then we've had that reversal down. And then once again, we've had that reversal onto this order block now. So as you can see here, this has gone into this area, the last down candle before an up move. So if you're looking at like this scenario, once again, you kind of, if you wanted to, you could have it as tight there, or you could have it below there. And then once again, it's nipped you in, and then you've gone up, it's created an equal high. So generally what banks will do is they will create, and this is going a bit more in depth, guys, for like a newbie, and I apologize for this, but it's just to give you an idea of kind of what smart money and the supply and demand and those kind of videos are going to teach you. But I think it's important for you guys early on to kind of know what the banks do and kind of how they work. So if I just get my brush. So what happens is price goes like that when it can, sorry, 1 sec, that was fucking awful. Let me delete that. I had a bit of a delay on it. So what happens is when price does only three things. It goes up, it goes down, and it consolidates. And consolidation is when it just moves sideways. So when it goes sideways, what happens is it builds liquidity on either side. And then generally what it will do is it will take out both sides before then moving on. So in this scenario here, I don't know where the bloody Euro USD's gone. It's decided to disappear on me. 2 seconds. Reload. It's fucked off. I'm sure it'll come back in a minute. What it does is price goes like this, and it creates equal highs and equal lows. So you've got sell orders here, buy orders here, sell orders here, and then what happens is you can get people that trade this. They'll trade equal highs and equal lows, and you see them all the time, and that's fine. It's absolutely fine. But what you need to be wary of is it's not always going to do that. And what you'll find generally is once money's been like built there, and money's been built here, what the banks will do is they'll kind of purposely go up, go above these, take all the liquidity there, come down, take the liquidity here, and then generally they either carry on going straight down or they'll just reverse and then they go. So when you're looking at like the banker's strategy, generally this is the area that we would get in. So we'd let them crack on with that. We're not interested in that. We'll let them do their consolidation and whatever. We'll let them collect liquidity on both sides. And then that's when we'll look to get into the trade. And generally when they do this move here, that's when they'll go down to like an order block or they'll sweep liquidity, and then that's when they'll go. So you've just got to be wary how banks move. So if I come off of that and go back onto it, hopefully it'll show up again. Yeah, there we go. So so it's just showing you guys. And what happens is on the 1 minute, you'll see it all the time that price just kind of respects these levels. So like this point here is a perfect example as well. We've had a little bit of a reaction here. So like some reactions are better than others, but you're generally always going to get a reaction. So this scenario here, right? You got this order block here, this last up candle before this massive down move. Once again, prices kind of nipped it. We haven't had that massive kind of pull down, but we've had a reaction off it. And then it stayed under, created an equal high, and then we've had that move. And as you can see, it's taken liquidity here, or it's pretty much created an equal low, actually. Created an equal low, and then we've had the reversal, and then it's taken liquidity. So this is what I'm saying about it creating equal highs and equal lows. So it wouldn't surprise me. So the markets are going to close soon. So it wouldn't surprise me if what happens early next week, this price comes down, takes liquidity there, and it's either going to carry on going down or it's going to go up and it's going to clear this. Because there's at the moment, there's like all this liquidity sitting up here. And obviously you've got liquidity sitting here, but then you can go on the larger time frames. And this is why it's important to start on the larger time frames to get an idea of direction of where we think price is going to go. And we can see from this, there's some weird fucking pictures on it. But at the moment, we're in an uptrend. Okay, and I'm sure if I look back, that this area is reacting off of something. So so what you want to do is, when ideally you're kind of looking for breaker structure on like the 15 minute. 15 minute is the kind of is the baby really. So the pairs I trade are CAD JPY, Euro USD, and NZD USD, and that's why I've got them in blue. I find these pairs move really nice. They respect quarter theory really well, and they also on the 1 minute they're really nice to trade. Really, especially CAD JPY. CAD JPY is like really nice, but it's quite a slow pair, and the spread on it is bigger than most. That's the only downside. But what I do is I kind of look for like areas where it's good to get in. So to me, I kind of, when I was explaining about the sniper and like areas being taken, you can kind of see where price is kind of on a downtrend. It kind of goes into these order blocks, and then we get the reverses down. And what you've got to realize is on the 1 minute, structure can be broken all the time. So generally on a larger time frame, when we're looking at structure, we're looking at, say, a downtrend. this is your typical downtrend on a larger time frame generally. On a smaller time frame like the 1 minute, this is what we see. So it's going down, as you can see, it's going down, but it's not your typical point where the bit below doesn't go a bit above the bit above, if that makes sense. So we've got pretty deep pull down here. It's come up, and so at this point here, you're kind of looking at this area thinking, oh, actually, this looks like it's actually going up. And then what happens is price pulls up into this area again, into this order block, and then it kind of pulls down and goes even lower down. So you just got to be wary that the best way to deal with the 1 minute, if you guys eventually decide to do the 1 minute, is kind of look at like the highest part, and price will generally go down, break structure, and then it will pull up and then go. So what I mean by that in this scenario here, and this is kind of what Jason's teaching you guys on the supply and demand videos, is this is your structure here, right? So you've got like the lowest, like your lower low before the high, right? And then we've had that breaker structure, so it's cleared that bottom level there. So it's cleared this level. One second, let me get that working. So breaker structure, okay. And then what it's automatically done, bearing in mind this is the 1 minute, so this is each one of these candles is only a minute, so we're talking probably like 5-10 minutes later, it's pulled back up into this level here, this order block area. Where are you? It's here, isn't it? Actually, I've got it here. Yeah. Pulled into this order block area here, and then we've had the reaction down. So if you would have looked at this as a trade, what you do is put your stop loss a little bit above to account for spread. And what you would have found is it's broken structure, it's come back up into your area. Sorry, one sec, I'll move that. No, I don't know what happened there.
Sorry, Sean.
Yeah,
how do you work out your lot size so quickly on the 1 minute? Because I definitely struggle with
it. Yeah, so it just comes with a bit of time, mate. So I know off a 100k account, if I'm risking 0.5%, it's generally around six lot size for roughly 10 pips. So I base everything off of that then. So I can work out on different size accounts in my head pretty much what lot size very roughly it needs to be. So on a funded account, really you kind of want to be just risking 0.5%. We've got 100k accounts, but technically you haven't got 100k to trade with. Like with a 100k account, you can't lose more than 5% in one day or 10% overall. So really what you've got is you've got a 10 grand account that you're trading like it's a 100k account. So to help with mindset, you're actually better with the funded accounts to actually risk 0.5% per trade than you are a full percent, because you haven't got really that much room to play with. Like Connor's got over 100 grand in his account that he's built up over 2 years, so he could risk 2% per trade if he wants, because he's got that 400 grand to play with. Whereas with a funded account, we don't have that much really. So, and if you have a bad day, it's not hard if you're risking 1% a day to kind of go into like the negative and hit like -3, 4, 5%. And the problem is if you hit that -5%, then you're going to lose the account. So this is why we say kind of with funded, yeah, risk half. But that's how I base everything, mate. It's off my 100k account. So it would be a case of if I'm looking at a trade like this one here, 63 to 72. Say for instance, I decide to make that 63 just to make it easier. So that's a 10 pip stop loss there, right? So I'm then putting to risk 0.5% on that. I'm putting a 6 pip, a 6 lot size. So I know for a 6 lot size, every 10 pips it moves, I'm making £500. So then this is where we kind of then look in this scenario here, and it's just fucking dropped. So once again, if we put this on here, just to give you guys an idea. So we give it plenty of space to move on the stop loss side. I move this down, and then look, it's just fucking dropped. But you've got all of this imbalance here. So like imbalance will be filled, especially on the 1 minute. So and if you guys don't know what imbalance is like pretty much when price just moves one way and it's not kind of pulled back on itself to cover. So what happens is it needs filling, and as you can see, we've had like massive manipulation there from news and then it's built some consolidation here, and then it's slowly worked its way and filled all of that imbalance here. So the imbalance is the part that hasn't been covered by candles as they move along. So from this level here, just to show you guys, from that level there to that level there, as you can see, that's imbalance. So that needs filling, and you'll get imbalance on all time frames, even like the 5 second, everything, and it all will. And at some point, the banks will come back and they'll fill that. Okay, and that's what they've done here. They've pissed about here for a bit, and then they've slowly made their way down. By the looks of it, they've knocked into this order block here. Like I said, this last down candle before the up move, or the last up candle before a down move, is the order block. So if we put our thing there and look straight into it, and then we've had a little reaction off. Okay, so it's just making you guys aware of these. So when I'm looking on the 1 minute, I'm looking for these order blocks, but you can also see reactions off of them on the way up as well. So like this one here, for instance, this purple one here, you've got this here.
Not on video,
right? Look at that, straight on that. We've had a reaction there, not a big reaction, but you've had a reaction, and this is kind of what you need to be aware of. So you're going to always get reactions on these levels, and then all that will take the time is just working out that some levels are going to be stronger than others, because you will get, even if it's like a 5 pip reaction, it's still a reaction. Okay, so yeah, that's how I work out lot sizes personally, mate. I used to have a C-Trader account when I first started. C-Trader is really good in the sense of it kind of works out your stop loss and your pip size for you by when you put in the trade. So in that scenario there, I would put in like the level I wanted to get in. So I'd put 163, 100 and then 0.63 as my entry. I'd put 100.73 as my stop loss. And then I'd put in then the size of my account, and it will tell you what size your lot size needs to be. And then it will tell you how much you're risking and everything. So all your details are in one area. And then I used that to practice for quite a while, till I got to kind of know lot sizes and kind of what I could risk per trade, depending on how many pips I was risking. And then now I don't bother. I don't need anything now. I just kind of I just put lot sizes in, because I know very roughly how much I'm risking depending on how big my stop loss is. Just took a trade on USD CAD. If you want to take a look, Ali, you savage. Friday night USD CAD. Let's have a look.
Yeah, I know, mate. I'm naughty, I know.
You're really naughty, mate. Okay, what have you done? So on the 1 minute?
Yeah, I'm already out now, mate.
Oh, you've got out?
No, down. Yeah, down there. Well, right where it is now.
Oh, right. Okay. I was looking at this here. You know, this
No,
this
literally
area
just
here.
happened, mate. Low down. No, down the next one. Yeah, down
This
here.
one here.
No, down. That's it at the bottom. I got in.
Oh, you got in there.
Yeah, I'm already out for a 1 to 3.
Yeah, nice. I saw this straight away. This kind of was screaming at me a little bit. As soon as I turned it on, I was like, oh yeah, there we go. So this is your typical supply and demand trade. So what happens is you have like an equal low in a sense. Like here, you have an area here, price breaks up, breaks down through, and then you have a retest of this level here. And you guys will see this all the time. If you back test this, it happens all the time. Sometimes it doesn't like carry on down. Sometimes it will just carry on going up. Like, so you've just got to be wary.
I'm hoping it goes up.
Huh?
I'm hoping it goes up some more. Be nice
Yeah, no, it probably will. But you always get a reaction though, don't you? This is what I'm saying. If you generally go for 5 to 10 pips off of these areas here, you're pretty safe. So like, yeah, you can see here, that was like what, 66 odd, we've got 61 there. So you got like 5 pips there. It might go down a bit more. Who knows? But yeah, that's kind of what I saw straight away.
But I took a buy from low down there.
Yeah, nice. Was that just kind of because it took liquidity here?
Yeah, there on the 5 minute there was a wick. I think it was 5 minute. Let me just look at my chart as well. I had it marked.
Ah, yeah, you've got this here. This here, mate.
That's the wick, mate. Yeah, in that wick there.
Yeah, there.
It was in that.
Yeah,
I looked
nice. It's just nipped it.
back,
You've had a nice pull up.
and I waited for that. Yeah, that engulfing can on the 5 minute, then it pulled back a bit,
Yeah.
and I got in. I market executed that one because it didn't actually hit my zone, but it showed a reversal.
Very close,
Fine.
wasn't it? Yeah.
Yeah,
Yeah. Nice.
quick in and out on a Friday.
Who doesn't like a quick in and out on a Friday, mate?
I like them any days of the week.
Yeah, I was saying I'm not fussy either. I'll take them any day of the week. No, cool. What guys, is this kind of blowing your mind a little bit for the new people in here? Is this a bit too much, or is this all right?
It's fine for me, mate. Personally,
It's so mind blowing that no one talks.
I think they're
No, okay, it's good for you guys. Cool. Okay, that's all right. Yeah. I think it's handy to know. You guys are going to learn it anyway, so there's no harm. Like if you want to go over some more basic stuff, or if there's stuff that kind of like you're getting confused with, then this is the reason we do these sessions is to kind of help you. So please take like full advantage of getting on the lives and kind of asking questions, because yeah, you're not going to learn unless you ask and make mistakes and stuff like that. So it's the point of doing it. But yeah, no, that's cool. I'm just really thinking what else to go over. Kind of, yeah, you can see like that's done that there. You can see it's done it here. 5 minutes quite nice, to be fair.
I love it.
You can see here it's kind of come into this area here as well. So when you're so when you guys are marking stuff up, generally what you'll do is you'll kind of just use an area. You can see this area here, that area there. You've got also this area here. Oh shit. Once again, that area there. And like you've had reactions, as you can see, off both. So once you, and this is the thing, right? Once you start seeing stuff, you can't unsee it. And it's really difficult to explain to a new person like what you see, because it's like and the way I kind of explain it is, it's like when you're looking to buy a new car and you get a new car, you then see that every fucker's got it. And it's very similar to that, in the sense of once you start seeing stuff, you can't unsee it, and then it's everywhere. So I'll just kind of look at stuff now. Like I don't need indicators and stuff. You can just look at a naked chart and just be like, right, okay, that's it. That's a key area there. That's doing that there. You've got imbalance there. You've got mitigation or whatever. And it just comes with time. It is pretty much chart time, and just putting a bit of effort into it, and you will get it. You really will. And then yeah, it's just a case now of what that does. It may take out this high. It's in like a nice uptrend in it. So
I think it's going higher.
yeah. No, cool, nice, mate. Yeah, nice, cool. Has anyone got any questions? Let me. I was watching this one and one OD. Cool. Okay. Yeah. So what I'll do is I'll quickly just go over the quarter theory levels again, just so you guys can see. Yeah, so you can see here how we've had like reactions off of these levels. There's like liquidity sitting under there now. So I use quarter theory to help me get in and out of trades, especially coming out of trades. If I'm like nice in profit on a trade and I see that price is struggling to break through a quarter theory level, I will generally take the trade there off the table. I just don't trust it. So like I said, some pairs respect quarter theory better than others. Euro USD is obviously one of them. It respects it really well. But it's just however you trade. But the thing is, what you've got to understand is the best advice I could probably give is don't compare yourself to others, and kind of just go at your own pace. And you may see things different to how others see. Like a perfect example was I was in a trade on Euro USD, that Euro USD trade. Ali was in it as well, but going the opposite way, or he was looking at it the opposite way. it turned out Ali was right. It did carry on going up. And really, what I should have done is I should have taken profit because I was up quite a decent percent.
You
But
must
I
have been
had
up a bit.
yeah, I was it wasn't bad, but I had my TP about 25 pips below.
Yeah.
And ironically, after it took out liquidity above and then reversed within that hour, it would have hit my TP and it's pretty much stopped at my TP.
Yeah.
So I was fucking pissed off. But
Because
yes, what happened?
I was in a buy up to your entry, I think, because I caught the buy up to you and then you caught the sell back down.
Yeah, well, I'd been in it, so I actually had 2 trades running on it. I had an 8 lot size on it, and I had a 4 lot size. And what it done is it went down and then pulled back up into that level. And I was like, oh, do I put another one on it? Do I put another? Because I'd already had 2 on it because I was confident because it on the 1 minute it had taken out everything in that area.
Yeah.
So there was nothing left for it to kind of collect. So I was really confident it was going down, and it did go down. But then I was then looking at like points of interest for the drop. And then yeah, obviously pulled back into its area, then had a reaction and went down again. And then obviously from that point it just kind of turned and carried on going up. And then it took me out and then went up about what's that?
You got out with some profit, didn't you?
Pretty much break even on it, mate. Yeah, I didn't I should have taken it, but this is I would say with trading, the thing I find most difficult with trading is I'm naturally a greedy fucker, and that's my downfall. Like I can trade all day long, really good trader, but taking profit I'm awful at. So that's one thing I'm constantly trying to improve on is taking profit, because I was in a half decent amount of profit because my team, I don't look at it as money, I look at it as percentage, right? So for a month's wages or what an average person earns over a month or a couple of weeks or whatever, it was actually pretty good. But because percentage wise it wasn't what I was aiming for, I should have taken it off the table. And hindsight's a wonderful thing, but I just didn't. And yeah, it kind of my greed bit me in the arse.
I said to Dean that that's the same for me, to be fair. I've started trying to take partials. Yeah, for me, I was always moving my stop loss into stop profit. And then it would, too soon, and it would just come back down, hit my stop profit, and then it would take off again. Yeah.
I think the best way in those scenarios is mindset wise is when you're getting into those trades, just treat the trade like you've lost it already. So what you want to do is kind of have like a key area, like generally like an equal low if you're on a sell, or an equal high, or like a mitigation like area for you to take the profit, or liquidity sweep, or whatever it may be. But what you want to do is just kind of leave your stop loss where it is, because you may find, like if I draw it here, so say for instance here, say for instance that's your entry there, right? Say you've put it a little bit below to account for spread, and then your stop loss is there. So what can happen, and I see it all the time, is price will come up, it'll kind of work its way up, it will kind of come back into here again, it'll go back down. Sorry, I'll carry that on. We'll go back down. May even create an equal low, so it's kind of like building liquidity. Then it might work its way back up into here, and then it will go. So if you would have kept your stop loss where it is, you're safe, you're fine. Okay, yeah, it's a pain. You've kind of been in profit, you've gone back to break even. You've been in profit, you've gone to break even, but then eventually it's gone. Whereas if in that scenario, if you're down here and you're like, yeah, fucking sweet, I'll move that there. And now that is my stop loss. So my stop loss is now protected. You're getting taken out. You're not taking anything home.
But there's a lot of people. Sorry, Sean.
Yeah, go on, mate. Go on.
But there are a lot of people. If it comes back up a second time to their entry, they get out. I'm guilty of it. Like you think it's gonna
carry on going up.
Yeah. So you, rather than treating the original money as lost,
you know,
you start to panic and you get out like, you know, with 40, 50 quid before it takes you out, and then it goes your way and you're like,
to be fair, I had that today on EU USD, and it luckily enough, obviously I was driving or whatever, and I every now and again when I sort of stopped, check it, and yeah, it come back down, broke even, and then went again, and I was like, oh yeah, thank God I was driving.
Yeah, you didn't see it because you didn't get a chance to get emotional with it.
Yeah, exactly.
And make those bad decisions. Yeah.
But as I say, later on, I did take the partial, and then I was like, I'm covered then. So rather than move my stop loss. So
yeah, this is kind of what we say to people. Like, people don't realize how fucking important mindset is with trading. It's so important. It's just like if you can nail your mindset, you will make an absolute fucking fortune. You will, because learning this isn't actually that hard. Like, once you've got the basics of it and you've put a bit of time in on the screen, it's not really that hard to get. But as long as you use the right risk management and you're consistent with like your trading plan and your mindset's good, you can make an absolute fucking fortune. And but no, cool. No, yeah, that's what I struggle with. Yeah, I'm a greedy fucker. And to be fair, I'm going to teach my wife, because the amount of times I've been in profit, she's like, you need to take that short. And I'm like, no, it's nowhere near my TP yet. She's like, yeah, but it's fucking like 1,200 quid or whatever it is. She's like, that's fucking a lot of money. And I'm like, yeah, it is, but it's not what I'm wanting. It sounds really bad, but on a 100k account, it's like 1%. So you're like, no, I want more than 1%. So yeah, she'll probably do better than me, to be fair, because it gets like 100 quid, she'll take it. And then all she would have is like fucking shitloads of £100. It would probably amount to like 5 grand or something like that. But yeah, so women are generally better at trading because their emotions and like how they are. So same with kids, like with like teenagers and stuff like that. If you've got like kids, get them involved. Like I'm gonna teach my daughters how to do this, and they'll be really good at it because emotion with them is totally different. So it's yeah, no, I love it, but it's just fucking stressful. But it's my own fault because it's stressful. It's not the market's fault or anyone else's fault. I make it stressful for myself. So cool. Is there any I'm just looking at time. Is there any questions before I go? No? Everyone's good?
All good from me, mate.
No, awesome. This has been recorded, so I'll download it after here and I'll stick it in I'll ask Dean where he puts them. I think it's in the newbie section, isn't it? It's not really been a newbie session as such, but it's been good. Hopefully people take something away from it. It's nice to do a live. I haven't done a live in ages. But no, cool. All right, guys. Yeah, have a good evening, and yeah, have a nice weekend, and I'll catch you guys soon.
Cheers, mate.
Cool. Take it easy.
Bye-bye.